A recurring theme of MacroWatch is that credit growth drives economic growth. Another is that capitalism evolved into creditism when dollars ceased to be backed by gold 5 decades ago. In China's case, I suppose it would be more accurate to say that communism evolved into creditism. This video will take a look at creditism in China and show that it's running out of steam. Total credit in China, known as aggregate financing, increased 25 times between 2002 and 2023 to 380 trillion yuan, approximately $53 trillion. In 2003, total credit in China increased by roughly $450 billion. In 2023, it increased by 10 times that amount, to $4.7 trillion. Aggregate financing is the broadest measure of credit that's published for China. So that's what we'll focus on in this video. But the data for aggregate financing only goes back to 2002. China's extraordinary credit bubble started long before then, however. It began in the 1980s. Between 1985 and 2023, banking institutions' claims on the private sector, or in other words, loans, increased by more than 400 times. Consequently, China's economy boomed, more than boomed. Since the mid-1980s, China has experienced the most extraordinary period of economic growth in the history of the world. Nominal GDP has increased 139 times since 1985. This credit-fueled boom transformed China from a very poor developing country into the second largest economy in the world. China became the main manufacturing base for the global economy. It put in place the best infrastructure in the world. It built millions of high-rise buildings. And it became a superpower that's now rivaling the United States for global supremacy. In 1985, China's economy was 7% the size of the US economy. By 2021, it was 76% its size. Now, however, China is confronted with a series of challenges that are likely to bring the country's economic growth to a standstill, or something much worse than a standstill. As described in the previous video, these include the catastrophe in the country's all-important property market, China's shrinking population, and the exhaustion of the country's economic growth model, which is based on producing far more goods than its population can afford to buy, and exporting the surplus abroad. This video will show how China's economic crisis is reflected in the slowdown in credit growth in the country. The growth in aggregate financing averaged 19% a year from 2003 to 2014. Since then, it's been closer to half that level. As credit growth slowed, so did economic growth. The growth in nominal GDP was only 5% last year. Nominal GDP growth in the US was higher than that, at 6.2% last year. This chart shows the downtrend in both credit growth in red and economic growth in black, side by side. Both are clearly slowing. And this chart shows total credit and nominal GDP in billions of yuan, going back to 2002. As you can see, credit has grown much faster than the economy. In fact, the ratio of total credit to GDP has increased from 122% in 2002 to 300% last year. This very rapid credit growth has been the driver of China's very rapid economic growth.